In the world of investment possibilities, dividend growth stocks stand out as a great way to make money for people who want to make a steady income and profit from long-term growth prospects. These stocks come from companies whose dividend payouts have been steadily going up over time. This shows that the companies are financially stable and have the potential for long-term growth. In this video, we will talk about dividend stocks for growth. Number 1. MSCI Incorporated. One of the biggest names in the financial world is MSCI Incorporated. They make financial measures that companies in many industries use, such as a wide range of exchange-traded funds. What makes MSCI stand out is that its income growth has been the best on our carefully chosen list over the past 3 years. Along with this steady growth, a strong forward 5-year average yearly earnings per share estimate of 13.1% shows that the company should be able to keep raising its dividends for a while. EPS has grown at an average rate of 20.5% per year over the last 5 years, showing that MSCI has been stable. Analysts think that it will go up by 10.1% this year and 14.2% next year. MSCI's efforts to increase shareholder value are also clear through its share buyback programs, which help to provide a 2.3% shareholder return. MSCI has regularly done better than the Standard & Poor 500 over the past 10 years, with an average yearly total return of 28.9% compared to 12.6% for the Standard & Poor 500. Number 2. Hershey. The Hershey Company is a market leader in the candy business with well-known names like Kit Kat, Kisses, and Reese's. Hershey has a great history of increasing dividends for more than 10 years, which shows that the company is dedicated to giving back to its owners. Dividends are expected to grow by 5.8% a year for the next 5 years, with a 6.5% increase expected this year. Even though the price of Hershey's shares has been going down lately, the company still has a lot of room to grow its payouts. Its current shareholder yield, which includes both dividends and share buybacks, is 3.4%. Over the past 10 years, the company's overall return has been lower than that of the Standard & Poor 500. However, the current state of the market may make now a good time for investors to think about Hershey as an investment. Number 3. Target Corporation. It is one of the biggest store groups in the U.S. It sells a lot of different things like groceries, clothes, and household items. Target has raised its payouts for over 50 years in a row, which shows how strong its finances are and how committed it is to creating value for its shareholders. Analysts expect strong annual EPS growth over the next 5 years, with a 4.6% rise this year and a 12.2% rise next year. This means that Target is in a good situation to keep growing its dividend. The company has a 2.9% shareholder return, and its earnings per share have grown by an average of 7.4% per year over the last 5 years. This makes it even more appealing to investors who want to make money and see their investments grow. Even though Target stock prices have been going down lately, the recent uptrend makes it a great time to buy. Over the past 10 years, Target's overall return has been higher than the Standard & Poor 500. Number 4. Domino's Pizza Incorporated. Domino's Pizza Incorporated is a major player in the fast food business. It focuses on franchises and takeout restaurants in the United States and other countries. The company has a great history of increasing dividends. For more than 10 years in a row, they have raised them every year. Domino's EPS growth has been an average of 11.9% per year over the last 5 years. This is very close to what experts expect, which is a 12% rate for the next 5 years. Domino's is still in a good situation to keep growing its dividend, as its EPS is expected to rise by 7.6% this year. Also, the company's 3.1% shareholder return, which comes from both dividends and share buybacks, makes it more appealing to investors who want to make money. Domino's total return over the past 10 years, which is about 3 times that of the Standard & Poor 500, is another sign that it could be a good purchase. Number 5. Marsh & McLennan Companies, Incorporated. It is an insurance and consulting services company that helps clients all over the world with issues related to risk, strategy, and people. It has been increasing its dividends for more than 10 years in a row. The company is expected to continue this trend with EPS growth of 7.9% this year and 9.5% next year. Over the last 5 years, the company's EPS has grown by an average of 18.4% per year, which has regularly outperformed the Standard & Poor 500 and given investors an average annual total return of about 20%. It is dedicated to increasing shareholder value, as shown by its 2.3% shareholder yield, which includes payouts and buybacks. This makes the company even more appealing to investors looking for income. Number 6. Automatic Data Processing, Incorporated. It is a leader in providing payroll services, outsourcing human resources, and employer insurance solutions. ADP has a great history of increasing dividends for 49 years in a row, which shows how committed the company is to protecting shareholder value. With EPS growth of 18.7% per year, on average over the last 5 years, and a growth rate of 10.9% expected this year, ADP is on track to hit a major milestone in late 2024. 50 years of dividend increases. Over the past 10 years, the company's total return has more than doubled that of the Standard & Poor 500. This shows how appealing it is as a safe way to make money. Number 7. United Health Group Incorporated. It is a major private health insurance that provides a wide range of healthcare services in the United States and other countries. With a dividend growth streak that spans more than 10 years, United Health Group has proven itself to be a safe source of income for investors. Analysts expect the company's earnings per share to grow at a steady rate of 10.5% this year and 13.4% each year for the next 5 years. This is in line with the steady growth of 14.5% per year over the last 5 years. United Health Group's strong total return record over the past 10 years, which has been much better than the Standard & Poor 500, makes it an even better long-term investment. Number 8. ITT Incorporated. The company ITT Incorporated is a conglomerate that makes a wide range of goods for markets such as aircraft, automotive, and industrial. ITT has shown a strong dedication to rewarding owners by increasing dividends for more than 10 years in a row. Analysts expect the company's earnings per share to rise 10.6% this year, which, along with its dividend growth rate of 13.2% per year over the last 3 years, shows that it has the ability to keep growing its dividend. Even though ITT's total return over the past 10 years has been slightly lower than the Standard & Poor 500, its 1.6% shareholder yield, which includes payouts and buybacks, makes it more appealing to investors who want to make money. Number 9. Elevance Health Incorporated. It is a health insurance company in the United States that assists its clients with a variety of medical needs. A dividend growth streak that spans more than 10 years shows that Elevance Health is committed to increasing shareholder value by consistently raising dividends. The company has had strong EPS growth, averaging 12.2% per year over the last 5 years, and is expected to have a growth rate of 12% this year. This is a good sign for its ability to keep growing its dividends. Elevance Health's strong total return performance over the past 10 years, which far outperformed the Standard & Poor 500, makes it an even more appealing investment choice for steady income. Number 10. Booz Allen Hamilton Holding Corporation. It is a consulting business that works with clients in many different areas to provide a wide range of engineering, cybersecurity, and digital solutions. Booz Allen Hamilton has kept up its dividend growth streak for over a decade, even though its earnings per share have only grown by an average of 1.7% over the last 5 years. This shows that the company is committed to creating value for its shareholders. However, analysts expect EPS growth to pick up a lot. They predict an increase of 18.4% this year and an average yearly rise of 12.6% over the next 5 years. Over the past 10 years, Booz Allen Hamilton's total return performance has been better than the Standard & Poor 500. This shows that it could be a good choice for investors who want to make money. What do you think of our video? Let me know in the comment section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.